The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call 800-306-1990, 800-306-1990. And yes, of course, let's take a look at the S&P 500. Right now, it is up about 51 points. The 10-year Treasury flat. Mortgage-backed securities are up 16 basis points. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So what did the loans do yesterday? Well, it looks like the 30-year conforming 6.432, that was up. The 30-year jumbo, 6.26, that was up. FHA, 6.347, that was up very slightly. 30-year USDA for our rural borrowers out in the rural areas. Ironically enough, there's one zip code in Santa Ana that qualifies as rural. 6.327, that was up. And the best loan on the market, the 30-year VA loan, 6.187, that was up. So we got a clean sweep all the way across the board. All the rates are a little bit higher. But why? That's the whole issue, is why are these things happening? Well, has a lot to do right now. Existing home sales is what's going on today. Measures closings on existing homes showed that sales were down 7.7% in November to 4.09 million annualized pace, which was weaker than expectations, looking for a 6% decline. Year-over-year basis, sales are down 35%. Inventory continues to move lower after peaking at 1.3 million in August, as it does every time this year after the normal seasonal build, and declined for the fourth straight month to 1.14 million. This is a decline of 6.6% from the previous report. Continue to limit the downside in home prices. Notice that. Limit the downside in home prices. Why? Because there's not enough supply. If there was the supply, then we'd have an issue. But there's not enough supply. That's why we've got a limit on the downside of pricing. But here's the other part of that nobody's going to tell you, is that when people are not buying houses, they're not doing as much on repairing that new house to move in. They're not putting in the new carpet, the new paint. So there's going to be a slowdown in the residual expenses. No moving companies, no title insurance, no real estate, right? So all of that's going to be driving a recession, or helping to drive the recession. But the prices of the real estate's not going to drop because there's not the properties available and the buyers are not out there buying. So it's keeping that in balance. First-time home buyers have accounted for 28% of sales, which is unchanged from the previous report, but amazingly 2% higher than this time last year. Cash buyers accounted for 26% of sales, also unchanged. Investors purchased 14% of homes, which is down from 16%, and means that 1 out of every 7 homes is an investment property. Make sure that you give us a call if you want to understand more about that. Foreclosures and short sales accounted for 2% of all transactions, basically unchanged. NAR Chief Economist Lawrence Yun thinks that things are going to get better in the coming months. He said the market may be thawing since mortgage rates have fallen for 5 straight weeks. The average monthly mortgage payment is now almost $200 less than it was several weeks ago when interest rates reached their peak for this year, about 2 months ago. Not reflected in the numbers yet, but it is a good sign for the coming few months and should reflect higher sales. Realtor.com, according to them, their rent growth slowed in November for the 10th month in a row. Rents are now up 3.4% year over year as of November, which is the slowest growth rate in 19 months. The increase has decelerated considerably from the peak in January, where they were up 17.4% year over year. This is not showing in the CPI reports yet, but we should see deflation from this component in the coming months. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.